Hello, America. I'm Camille Chandler, and this is Qualitative Listening. Big day. Yield spike as the Fed signals a big shift. Let's start with the Treasury yields. The 3 month is at 4.3%. The 6 month is at 4.20%. The 2 year is at 3.84%. The 5 year is at 3.98%. The popular 10 year is at 4.34%, and the 30 year is at 4.79%. So, yes, indeed, yields are spiking, and this might be because of a Fed shift. Let's get into today's news. Tariff reprieve offers temporary relief. President Trump's decision to exempt smartphones and computers from recent tariffs provided a brief boost to U.S. tech stocks, with the S&P 500 rising 0.8% on Monday. However, market volatility persists due to ongoing trade uncertainties, including new tariff probes targeting pharmaceuticals and semiconductors. Next, investors caution amid earning downgrades. Major financial institutions, including Citigroup and Morgan Stanley, have lowered their earnings and economic forecast in response to volatile U.S. trade policies. Citigroup reduced its end-year S&P 500 target to 5,800 from 6,500, while Morgan Stanley cited limited room for market growth under current conditions. Let's look at the Federal Reserve. Cautious approach amid uncertainty. Federal Reserve officials are advocating for a prudent monetary policy stance. Atlanta Fed President Raphael Bostic emphasized the need for caution, describing the economy as being in a big pause and indicating that bold policy moves would be unwise until there is greater clarity. He noted that recent tariff escalations could drive inflation higher and delay the U.S. Central Bank's goal of reducing inflation to 2% until at least 2027. Next, inflation expectations rise temporarily. The New York Federal Reserve's latest survey of consumer expectations indicates that Americans anticipate a sharp but temporary spike in inflation due to new tariffs, with median inflation expectations for the year ahead rising by 0.5% to 3.6% in March, the highest since 2023. However, the average expected inflation rate over the next 5 years has dropped to 2%, down from a 2.3% peak in January, suggesting that consumers view these inflationary pressures as short-lived. Here are some global economic developments. Mixed global market reactions. Global markets are responding cautiously to shifts in U.S. trade policy. Shares of global car makers rose after indicators of potential exemptions on auto tariffs, benefiting firms like Toyota, Honda, and Hyundai. However, German investor sentiment has plummeted to the lowest level since the onset of the Ukraine war due to escalating trade tensions. That's the show, folks. Thanks for listening to Qualitative Listening.